Hey everybody, Smart Silver Stacker here, and I woke up this morning to discover that the price of silver overnight, over the weekend, has moved up another 7%, over 7% actually. And right now the spot price is at 24.59. At the close on Friday, it was just at 22.99. So this is a big move up for one day, and the trading day hasn't really even begun yet, so we'll have to see what the day holds. But if we look at the month chart for silver here, we can see that going back just 7 days to the 20th, silver was trading under $20. On July 20th, it closed at 1972, and today we're at 2460. So that's in the span of 1 week, a move of about 25%. So a huge move up in the price of silver over the past week or so. But I think it still has more room to move up. And of course, there could be a near term pullback. Silver could be a little overbought at these prices, but honestly, with the momentum it has, I'm not really convinced that that's the case. And even if there is a snapback, I think it'll just be a buying opportunity if there is a dip, because long term, silver I think has a lot of room to move up, and I am still stacking in 2020 even after this move up. And I'll tell you why. The first reason has to do with silver's relationship to the price of gold. And if we look at the long-term chart for gold here, we can see actually it's an important development today. Silver has moved up quite a bit, but so has gold, and it has actually taken out its 2011 high. We can see here on the long-term chart the previous high from 2011, $1,935, and today we're at $1,940. So that's an important milestone for gold. Also of importance on this chart, we can see the high before this move up was back in 1980 when gold went over $800. But if we compare that to silver's long-term chart, we can see that the high from 1980 for silver was actually $50, which is a price that we have never taken out. Silver came close in 2011, but if you look at the current price, it's lagging well behind that. Compared to gold, which is well above, more than double its 1980 high, silver is sitting at about half of its previous high. And if you consider that this is not an inflation adjusted chart, and these $1980 in today's terms would be worth about $150, silver is drastically underneath its 1980 high in nominal and even more so in real terms. If you were to adjust this chart for inflation, this spike would be much higher. So silver has a lot of room to move up. I think gold probably does too. Both metals will do well in the inflationary environment that we're entering into. But I think that silver has just way more room to move up. We're not even, we're about halfway to the 2011 highs. So if this is a precious metals bull market that's starting off, silver's going to get going, and typically in a bull market, silver will outperform gold significantly, and I think this chart shows that that's probably going to be the case. And the reason that I think that metals are going to do so well in the near future and for the rest of the decade has to do with the amount of money that's being created. You can see this debt chart right here. This basically is an incremental chart showing how long it took for the total federal debt in the U.S. to increase by $1 trillion. And each increment is noted over here in this right-hand column. So if you go back to 1996, we're $5 trillion in debt, and it took 72 months to hit $6 trillion in 2002. And then it took 22 months to hit the next trillion to get up to 7. And as you can see, there's just decreasing amounts of time. And as we go into the 2008, 2009 crisis, and we had TARP and QE and all that, and lots of federal bailouts, the time compressed down to 6 months in March of '09. So it only took 6 months to spend $1 trillion. or to go $1 trillion more into debt. And then during the quote unquote recovery that we've had over the past decade, you can see the time spread back out to about 14 months on average over the past 10 years. But once we get into 2020, with the massive amount of coronavirus relief and federal spending on unemployment and stimulus, we can see that in April we were $24 trillion in debt, and then 28 days later in May we hit 25 trillion, so 28 days. And then the next increment was 35 days. It took us to spend another trillion or go another trillion into debt, and that was in June. So the pace of money creation is increasing significantly, and don't think for a minute that the government is done creating money or that they're going to slow it down anytime soon. We're still in the middle of the pandemic crisis, and it's an election year. I'm sure that they'll spend a few more trillion before November gets here. I don't have any doubt of that. Another reason I think the metals are going to do so well, this is just more data that supports that we're entering into this massively inflationary environment. If you've never seen the U.S. debt clock, it's worth visiting here at usdebtclock.org. And some of the most pertinent information is over here in the right-hand column. You can see the dollar to silver ratio and also the dollar to gold ratio here. And basically what that is a measure of the M2 money supply. So that's one of the money supply statistics that's published by the Federal Reserve. And in 1913, the dollar ratio to every ounce of silver that was produced in that year was $2.65. And if we move that up to today, the amount of the M2 money supply compared to annual production of silver is almost $4,000. So a massive increase since 1913. Another interesting piece of information is this paper to silver ratio, which shows the number of derivative or paper silver ounces that are traded compared to the annual silver production. So for every 1 ounce of physical silver that gets produced, 171 ounces are traded in derivatives markets and futures markets. So in terms of physical silver, there's a lot more trading and money going around in that market than there is actual physical silver to back anything up. So if people with futures contracts begin demanding delivery of their silver, there's not going to be enough to go around. It's going to result in a massive price increase. So those are the reasons that I'm still stacking, even though the price has gone up so much in the recent past. Premiums even, if you go to buy a physical silver ounce, you're not going to pay $24. You're going to pay probably 30, 31, 32 because the premium for physicals, for physical metal is going up. But I don't think that's going to come down anytime soon. And I think that even at these prices, the ability to get physical silver is kind of a gift, and it's one that I'm going to take advantage of. So let me know what you think. What do you think's in the store for the future of silver? What do you think about this recent move up? Is it going to correct or is it going to stay up? Let me know in the comments below. Thanks for watching, everybody.